There. My name is Pavel Konechny. I'm the Chief Investment Officer at TriStar Trust. And I've been thinking about inflation and about whether we are going to see inflation later in this year. And the shorter answer is I don't think that we will, but I can see or understand why people may think that. When you take a look at what's happening in the economy, a couple of things. The Fed target rate is down at the 0.25%, so it's creating incredible liquidity in the markets. You can take a look at the fiscal health of households that's taking place. Um, everybody's situation is improving. When you take a look at the stimulus packages that's been passed, which is another almost $2 trillion worth of money is being pumped into the economy. And then you take a look at the fact that people don't really have a place to spend that money. And I've talked about the incredible ability of American consumer, their ability to spend money. And what I think is going to happen once the vaccination makes its way through the system, that we're going to have an explosion of demand. I would almost compare it to seeing the videos on TV on Black Fridays when the door is closed, and there's people lined up, and then the door opens and people just flood the stores and you can't even move. But eventually, what happens in that situation is that the products get purchased, and then eventually people leave, and the attendance in these stores goes back to normal. And I think that's to a certain degree what's going to happen. I think we're going to have an explosion of demand here probably in the second half of the year. And the fact that there's a production slowdown as supply chains have been disrupted because of COVID, there's just not enough supply. There's not enough product. So you have people having the ability to buy, yet you don't have enough product to sell. So that typically leads to increase in prices. However, I believe that will be temporary. The free market forces will kick in. What we will see is a supply increase. The supply chain's gonna fix itself. We're gonna have more product that's gonna keep prices down. And more importantly, while the Fed is, let's face it, is terrible in predicting where inflation numbers are gonna be, they're actually very good in working and fighting inflation. They have a lot more tools today than they had before. And because of that, whether it's setting the target Fed funds rate, whether it's buying and selling treasuries or buying and selling assets, because of these tools that are available to them, they're going to be able to keep inflation under control. With that said, you'll take a look at a 10-year treasury, and a 10-year treasury, which is a good predictor of where inflation is going to be, or it's a predictor of what's going to happen with inflation, increased from 0.5% or so last year to as of today it was 155. It hit as high as 166. So one would think that leads to a little bit more inflation in the future. However, you're still looking at a 10-year at 1.5, 1.6%. So I feel very comfortable that inflation is not going to be a problem on a go-forward basis.